Hey guys, welcome to The Market is Open. Check out our website, themarketisopen.com. Today we're going to be talking about Bob Lutz. He wrote an amazing endorsement for Tesla's Model 3 and for Elon Musk just over about a week ago, and I wanted to draw your attention to what he had to say. Also on the agenda today, we're going to be talking about Jim Chanos and some of his moves that he's been making in the stock market. We're also going to touch on Nikola, a hydrogen truck maker, which seems to be suing Tesla, and also Tesla Deliveries, which the website Electric seems to have gotten some more information about what deliveries are going to be like for this quarter. But before we start, please subscribe to our YouTube channel. We would really appreciate your support in helping us grow our channel. And also check out our t-shirt, specifically our Elon Musk Integral t-shirt in the description below. So let's start with this article that was written by Bob Lutz himself on roadontrack.com, where he says he was stunned when he saw the Model 3. And this is pretty crazy coming from Bob Lutz, who has been and continues to be actually one of Tesla's biggest critics. He said, not only was the paint without any discernible flaw, but the various panels formed a body of precision that was beyond reproach. Gaps of 3.5 to 4.5 millimeters are considered world-class, and this Model 3 measured up. So this is something that critics have been complaining about, that the panel gaps have been of all different sizes on the Tesla. A lot of regular consumers don't seem to care much about the panel gaps, but it seems to be a pretty big problem for the critics, and Bob Lutz has been one of the biggest critics who has highlighted this problem with the Model 3s. However, coming from Bob Lutz, the fact that Tesla, at least in the car that Bob Lutz was looking at, fixed the panel gap problem, that's a pretty big endorsement for Tesla and for Elon Musk and for the Model 3 itself. Keep in mind, this is coming from Bob Lutz, who's the guy that says Tesla has no advantages over competing electric vehicle makers. They have no software advantage. They have no battery advantage whatsoever. So, I mean, he's basically listing all the advantages that Tesla does have over competitors, but he hasn't been very friendly towards Tesla or towards Elon Musk. And in the past, they seem to be sort of friends. You could see this photo here from years ago when they were at an auto show, and Elon Musk was even interviewed with Bob Lutz a couple times before. I think Elon has actually looked up to Bob Lutz because of his history in the industry. I mean, he was the CEO of General Motors, but Bob Lutz hasn't been too friendly in return. I'm not sure why. Maybe he's a little bit jealous, or he's supporting his company, General Motors. He even said just a couple months ago that in another year, we'll see a movie called Who Killed Tesla, starring Leonardo DiCaprio. So, I mean, Bob Lutz is pretty funny, but I think this article that he wrote is a pretty big change for him. Also in the article, he says, don't get me wrong, it does require precise design and engineering as well as modern capable equipment, but excellent fit and finish also requires leadership, focus, and will, something that Tesla clearly has. So I think that's a pretty big endorsement for Elon Musk himself. He has been critical of Elon, but in this case here, it seems like he's made a 180. However, I do think he'll still remain critical of Musk, and he sort of has to be because he is from General Motors, and he is expected to support General Motors, although there's no reason he can't say something nice about Tesla as well. So he's sort of caught in the middle. He needs to back General Motors because that's his history and his legacy, but he does seem to admire Musk specifically in this article. And he does say in the article, while I continue to be critical of Tesla's business model and Musk's strategy, it was impossible to find fault with the visual quality of that Model 3. So Bob Lutz is definitely very impressed with the Tesla Model 3. And after all the bad things he said about Elon Musk's management, he does seem to lighten up on that, even though he says he's still critical of Tesla's business model. However, Tesla's business model does seem to be the future of how vehicles will be sold. Okay, let's flip over to Shortseller Jim Chanos, who's been also extremely critical about Tesla stock. He usually comes on television and bashes Tesla stock, as we all know. However, he did file an SEC filing not too long ago, maybe about a week and a half ago. And you can never tell with these funds. They're always hedging and trading, but he has been very critical of Tesla, yet his SEC filing shows that he owns about $420,000 in Tesla call options. So you would think it would be pretty dumb for him to come on TV at this time like he normally does and bash the company that his fund is actually long of. So I think it's pretty funny how these super negative bears aren't always as negative as they portray themselves to be. I mean, look, he is long the stock, so he does believe that the stock will go up. And Tesla stock, of course, has been beaten down into the 200s from the high 300s. I also think that these short sellers are trying to sort of bankrupt the company, so they need to spread as many negative things to create a self-fulfilling prophecy. But at a certain point, they might miss the boat and they're going to be forced to change their mind. So I'm not sure if that happened yet. I mean, Tesla stock is clearly down and it fell quite a bit. But I think Tesla's pretty far from bankruptcy, especially after the giant capital raise that they did. and so it's not over yet. However, Chanos did seem to want to lock in some gains on his short position using these call options. If you look at how a short position works in combination with a call option, Jim Chanos likely has a big short position on Tesla stock, and he's also going to be hedging it with call options. If you look at how a short position works, as the share price goes up, the value of the stock goes down. So you can see as the share price moves to the right, which is going higher, the red arrow indicates that you're losing money. But as the share price goes to the left, as the stock price comes down closer to zero, your short position goes up in value and you end up making a lot of money. For a call option, you pay a little bit of money and you have the right to buy the shares at a specific price. However, the call option is made up of the price of the call option, and there's also a time premium incorporated in that, because as time goes on, as you get closer and closer to the expiry date, the time premium wears out. So looking at this chart over here, when you buy a call option, you make a small investment, and that's the red line being negative because you have to pay money in order to buy the call option. And if the stock skyrockets, you make money, and if it goes down, you don't have anything really to lose besides the money that you originally put into the call option. So now if you overlay these two, which is likely what Jim Chanos is doing, he probably has a big gain on his short position and he's looking to buy call options to hedge his bets. So if the stock shoots back up, the short position is going to start losing money. However, the call option that you just bought is going to be making money. So they essentially cancel each other out and nothing really happens. And you could see that as you move to the right side of the graph, as the share price moves higher, both the call option makes money and the short position loses money, and they cancel each other out. If the stock doesn't really do very much, if it does nothing, then he just simply loses the small premium that he paid for the call option. However, things get pretty interesting for Jim Chanos if the stock ends up going down and crashing some more and heading closer to zero. The call option quickly becomes worthless and he loses what he paid for that call option. However, his short position starts to make money again, and you can see as the stock approaches zero, the short position goes up like crazy, and the call option, you only lose the amount you put in, nothing more than that. So by making this bet, he has quite a bit of upside if Tesla stock continues to go down as he wants it to, and no downside really, except for the amount of money that he bought for the calls. So the calls may have cost him a couple dollars per share. However, if Tesla stock starts going down like crazy, like for example, the stock could move $100 per share, then he's going to be making a lot more money than it cost him in call options. So I think that might be one explanation about why Jim Chanos has an SEC filing showing that he and his fund own call options on Tesla. Okay, let's shift gears here to a $2 billion lawsuit against Tesla for allegedly violating patents. Now, this article was written today, as you can see, June 25th, 2019. However, this is pretty old news, so I'm not sure why this article resurfaced this morning and why Investopedia decided to write this. If you do a Google search, you see that Nikola Motors sued Tesla in 2018, and 2018. So I think this is pretty old news, actually, in terms of this lawsuit. They posted this picture of the two trucks, the Nikola 1 versus the Tesla Semi, citing that they look very similar. So first of all, I don't think they actually do look that similar. But secondly, they do both look like trucks. However, I think the Tesla truck is actually more unique in my opinion. It's more recognizable and actually looks less like a regular truck than anything else. However, I think Nikola made a pretty big mistake by focusing on hydrogen trucks for too long, and then they moved into electric later. So I think they're going to be a little bit behind in electric vehicles, specifically semi-trucks, and therefore they aren't really competition for Tesla, in my opinion. And I think that's why they're suing Tesla, because they likely need money to survive, and that's probably going to be the main way they're going to be making money, as opposed to selling trucks against Tesla. The company was also founded in 2014, so it is a lot younger than Tesla is. And I also think they should be pretty careful when they're suing Tesla, because although Tesla gives away all of its patents in good faith, suing Tesla in not good faith means the patents are going to come into effect. So if Nikola actually had a product that wasn't really vaporware, they're probably going to be infringing on Tesla's patents. And if they all come into effect, I think Tesla has a giant moat of patents, which magically appears if you try to sue them. So I don't think this lawsuit is going to go anywhere. I think Nikola should just focus on their actual product instead of trying to sue Tesla. Okay, now let's talk about Tesla Deliveries. We heard from Electric this morning that they have insider information about Tesla deliveries for Q2 in June. That Tesla delivered around 22,000 cars in North America in June so far. So that adds up to a total of 49,000 cars delivered in North America in Q2, which is this current quarter right now, which ends in June. So I don't think you can tell too much from the information that they brought up today. It is new information, and it sort of acts as a floor for the number of deliveries that Tesla's going to have. However, if we go back to Q1, so I'm going to go back in time a little bit to last quarter, where Tesla delivered around 60,000 cars in total. However, about half of that, 29,900 vehicles, were delivered in North America. So there were quite a few vehicles delivered in Europe and China, about half of their entire sales for the quarter. So if you look back at this quarter in Q2, their sales are 60% higher than they were in the last quarter right now. And there's still 5 days left in the quarter. So it's sort of going to be hard to correlate. And last time they delivered 30,000 cars in the last 10 days of the quarter. So, I mean, obviously there's going to be delivery bottlenecks if you're going to bunch up a bunch of cars and then buffer them up and then try to deliver them all at once. Smoothing out deliveries over the quarter is definitely a way to reduce bottlenecks. But regardless of that, I think the goal is to beat Q4 of last year, where Tesla delivered 90,700 cars. So I think they might come close. It seems like their production is actually quite high for this quarter. They're producing about 1,000 cars per day. And of course, this will include all the cars, including North America, Europe, and China. And the 49,000 vehicle number that we have now is just for North America. So we really have no idea about what's happening in Europe. It could be 10,000 cars have been delivered in Europe or 50,000 cars. So I don't think it adds any more likelihood of Tesla hitting their goal or not based on the numbers that we received today. That said, a lot can happen in the last 5 days of the quarter. Tesla's been pretty notorious for delivering a ton of cars, especially because the tax credit is going to expire in a couple days in North America. It's going to be cut in half. So a lot of people are going to be pulling their orders back into June in order to get and to make use of that tax credit. And of course, Tesla's going to try to do their best to deliver as many cars as possible so that people can take advantage of that. But the quarter ends in just a couple of days, so people are going to be pretty excited to see the final delivery numbers when Tesla usually reports them a couple days after the quarter ends. Well, I hope you enjoyed this video. Please subscribe to our YouTube channel. We would really appreciate your support in helping us grow our channel. Thanks for watching, and remember to smash that like button.